Yeah, now we're talking. Now we're talking. Back to work. Back to work. Non-Farm Friday is right around the corner. Welcome back, guys. It's Thursday evening already, third day of March 2022. And of course, as always, my name is Joseph. Welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades, setting up for Friday. Not just any Friday, though. We got Non-Farm Friday, one of the biggest news events of the week coming tomorrow morning. I got some great trades on my radar for tomorrow. In tonight's video, we'll talk about my favorite trades. I got some definite short trades on my radar for tomorrow. Got some long reversals on my radar for tomorrow, but not to worry. By the end of this video tonight, I'm going to cover all my favorite trades, entries, exits, targets. But most importantly, though, I'll talk about some stuff to kind of keep yourself out of trouble tomorrow, because they're definitely, with all the ranges we're seeing right now and the big news tomorrow morning, all the stuff happening in Ukraine, I want to make sure you guys, finish off the week in the green, whether you're trading on your own or you're trading with us in our trade room tomorrow morning. Before we jump in, though, and get this party going, got a lot I want to cover here in this video tonight. Please make sure you subscribe to our YouTube channel. I publish this video every evening with my favorite trade ideas for the following day. I don't want you to miss tomorrow night's video, so make sure you grab that subscribe button down at the bottom of the video. Hit that little bell icon, because a lot of this stuff is very time sensitive. And don't forget, if you have any questions for me, drop those questions in the comments section. Would love to answer questions if you got them. And boy, I really appreciate you guys tuning in here tonight. If you enjoyed this video as much as I enjoy making it, if you use this newsletter to get your mind right and get those charts right for tomorrow, hit that like button, that thumbs up for me here on the video here tonight. I appreciate you guys carving out some time with me here on Thursday evening. But enough of the intro, though, huh? Let's get ready for Friday. Where are we going to make our money on Non-Farm Friday? Now, of course, everything's pretty bearish right now. You'll notice here we got the bears in control on the Emini, the Nasdaq, and of course on the crude oil. You'll also notice too, there's a couple of ranges here. And ranges, you guys have probably heard me say before, anytime we have a range on the chart, the range pretty much, you combine momentum with the range, and you pretty much know how to trade this stuff. So it's a relatively straightforward game plan for tomorrow. Again, like I mentioned in the introduction, we're very bearish right now, but boy, I mean, that could easily change with all the stuff going on right now in Ukraine. So I want to make sure we're ready for reversals, right, to get long. I want to make sure we're ready for the shorts, selling some pullbacks right now, and we'll make sure we're kind of covering all the bases here tonight on this video. A lot of the markets, a lot of these charts are pretty similar, right? So what I'll do is make sure you watch the entire video, because I'm going to talk about different variations in different ways to trade these markets, right, to kind of keep things moving here tonight. Now, tomorrow, let's make sure we're on the same page here. Tomorrow is not your normal Friday. Tomorrow is what we call Non-Farm Friday. Now, of course, the first Friday of every 1 month has the employment number, or the non-farm payrolls number. This is a pretty big deal. It's if you take out the whole Ukraine situation right now, which my heart goes out to anyone being affected by that. I know it's a lot more than just Ukrainian people right now, but I've definitely been impacted with that. You're definitely on my mind right now, so my heart goes out to anybody being affected by that. But if you take that out of the equation right now, this is pretty much the biggest news of the week. Right, we had that ISM number on Tuesday. We had the monetary policy testimony yesterday on Wednesday, and as I kind of warned you guys about this earlier on this week, right? This is kind of the big news of the week here, big scheduled news of the week. Now, in my experience, and given this is kind of a weird time right now because of the tensions happening in Ukraine right now, in most cases, the overnight market, right, leading up to this employment number will be relatively slow. I might be wrong tomorrow. I'll probably say 1 out of every 3, 1 out of every 4 kind of pre-markets ahead of these news numbers are pretty good. So if it's moving, definitely you can trade it. But what you want to remember is whenever there's a lot of big news coming, a lot of the bigger players are going to wait. They're going to sit on the sidelines. They're not going to put their money at risk until they know what that number looks like. Remember that trading is a lot like riding a bicycle. It's so much easier when it's moving. And so if it's slow overnight, you know what they're waiting for. don't push it, right? It's a lot easier to trade when it's moving, just like it's a lot easier to ride that bicycle when it's moving. So don't force those trades overnight. Save your bullets if it's moving pretty slowly, because about 10 minutes after that news number comes out, I'm not a big fan of trading the news. The news is very much noise. The news itself, it won't give you really any idea of what the market's going to do. It's all about the reaction to it. But by about 8:40, 8:45, we'll get our charts updated in the trade room, and we'll start looking for the trades in the reaction to that news number tomorrow. All right? So don't force it overnight. Don't force it overnight. And of course, be aware, this market may whip around a little bit after that 8:30 number, especially if that number surprises people. The number itself is irrelevant, guys. All right? I'm not going to waste your time by saying, well, if it goes above or below, it doesn't matter. All that matters right now is it doesn't matter what the number is. The news itself doesn't matter. All that matters is how does the market react to it? By 8:40, 8:45, are we trending? Are we ranging? Who has momentum? And then we find our setups from there. So be aware of that for tomorrow, and then save your bullets. Okay? If there's one thing I've learned over the years about Non-Farm Friday, is that we don't want to force bad trades tomorrow, right? We don't want to force bad trades, because next Monday is a reaction Monday. We get a couple of these kind of, in quotes, reaction days, right? The day after Non-Farm Payrolls, the day after FOMC, the day after any major news event. A lot of big traders, a lot of professional traders will not trade tomorrow if they don't see something good. They're going to save their ammunition, they'll save their bullets for the following day, because that oftentimes is much easier trading. Okay, so don't force bad trades tomorrow. And if you don't know what a good trade looks like, if you don't know what a bad trade looks like, or if you have, if your mindset is one where you keep on falling into bad trades, come out, trade this stuff with us in the trade room. I'll put all the trade room information you guys need in the description of this YouTube video, right? And we'll trade together. That way I'll show you what a good trade looks like. Help keep you focused and avoiding those bad trades. But definitely don't force trades tomorrow, especially late in the day tomorrow, because again, we got that big reaction Monday coming the following Monday morning. All right, guys, let's get back to our charts now. S&P, Nasdaq, crude oil, you're going to see a lot of similarities in these three charts here tonight. But I'll tell you, there is quite a few substantial differences. The S&P and the Nasdaq are very similar, but they're very different. And you'll see why I say that in a moment. Oil, right? Oil is very similar, but very different, and you'll see why. And so if you're really serious about your trading, you'll definitely make sure you watch all three of these here tonight, because I'm going to go over some different variations, and we'll talk about kind of why they're different and how that difference, what it means to us. All right, let's talk about the S&P first. We'll go S&P, Nasdaq, and we'll wrap up on the Texas T, the crude oil futures. Now, what's impacting this market right now? How would you describe this market? I would say we are pretty much a bear market into a trading range. That trading range, of course, acts like a magnet. And so whenever we have a trading range with a bear bias, we like to find support levels below, resistance levels above, and we're ultimately selling high and buying low. So we run lower into a trading range. It's not surprising to see sellers come in and sell it right back down into that range, right? So we definitely have a bear market into a trading range. Range acts like a magnet. The battle zones, right, or the place that we look for trades are the levels of support and resistance that are just outside of that trading range. The bears have control right now. And the sellers have a pretty easy job right now, relatively speaking. They can look for a short off the highs. We can look for a short off the big highs. And we can also look for shorts on breakouts going lower. We have quite a big wide open space down here for the sellers. Now, remember this, okay? Remember this wide open space, because this is a very big difference between this and the Nasdaq. Like I mentioned before, the Nasdaq is very similar at first glance, but it's very, very different, right? So you'll see what I mean here. Remember how this chart looks when we get to our Nasdaq. You'll see exactly what I'm talking about, how the differences are very, very important in how much space is down there, okay? How about the buyers right now? The buyers have to be a little careful, right? The buyers, of course, this is a very strong move down. The buyers can look to buy off the low, right? Buy off support, below the range. Buyers can thread the needle going higher, right, for a retest of this high. Okay, so buyers can look for basically breakouts going higher. Okay, reversal, if you will, going higher, or they can look for the bounce right off of that low. All right. So let's kind of go over this, right? So we kind of know where the buyers and sellers are interested. What would be the best way to trade this? Well, let's talk about now as the market goes higher here. Now, as the market goes higher right now, if the market goes higher here in the overnight, we know that range below us acts like a magnet. Now look back here. Look back here. It's a very good example, right? Strong move down. We pull back and see how the buyers come in. Excuse me. Buyers come in. They try to buy that pullback. Okay. The range down below us is a magnet. So think about where their stops are. Okay. Think about where their exits are. As I always talk about in our video classes here at School of Trade, think about where their pain is. You know, think about how you can trade into their pain. All right. I know it sounds bad, but that's kind of the way it works. So as we go up into this sell zone overhead, right, resistance areas above the range, now we start looking for those buyers to come in, try to get long, and we look for ways to use, excuse me, what I call a failure pattern to sell into those stop losses. Now, one of my favorite follow-up trades on this is to then look for a new channel. Draw a trend line off that low, trend line off that high, and look for, say it again, say it, the first test is the best test, right? I want to get that short, right, off the high. Now, when I say short, this could be a trap entry. This could be a failure entry on a faster time frame. It could be a pullback combination. Now, I know a lot of you guys have already taken the free trading course, and so you've learned all the entry signals and the rules of that, kind of how to draw the channels, right? I cover all that stuff in the free course. Oh, by the way, if you haven't taken that, I know most of you guys probably have by now. If you're one of the few who haven't taken that free trading course yet and learned all the entry setups, what I'll do is I'll put a little link up there for you in the upper right-hand corner. If you're sick and tired of missing the best trades every day, or maybe you're taking too many losses, or maybe you just really want a good roadmap to follow every day, that little pop-up there, that will take you to the website for our free trading course. You'll learn the roadmap, how to find the levels of support and resistance, but most importantly, how to time the entries properly, right? Because levels of support and resistance are great, but you got to time the entries properly there. So that'll cover all the details there. So next time when I say a failure, right? Next time when I say a buyer failure into a first channel pullback, right? You'll know what I'm talking about, right? You'll know what time frames to use, things like that. All right. Now remember, where's our target going to be at that point? We'll take a little bit off at the other side of the range, big chunk off at that low, right? That low will be your objective on that trade short. All right. Now, as we go higher here, okay, think about how could I be a buyer up here, right? How would I buy it as it goes higher? So there's a couple ways I would look to do this. First of all, a trap. Okay, and you guys learned this stuff in that free trading course. Traps are going to be key as the market reverses. Why do I say that? Well, just because of the resistance overhead, right? And remember, we're kind of at a big high up here, right? We're right at a big high above a weekly range ultimately. So you got to anticipate there are going to be some bears up here trying to defend this area. That does not mean we can't buy this. But we want to be focused on what we call trap entries. Okay, so here are two traps I would look for as we go higher. Okay, here's and again, I'll break this stuff up. We'll do a couple on the S&P, and we'll do a couple here on the Nasdaq. One of them that I would definitely be ready for, right, is this one, which would be the pop and grind. Let's say that we get something like this, right? Real strong pop up, right? Strong pop up, we pop up, right? We pop up. Now we start to kind of grind higher. That could easily happen because that happens a lot whenever you've got a lot of sellers who start getting out of their positions. Okay, so remember, there's a war breaking out right now in Ukraine, or has broken out in Ukraine, and so any little headline right now, they call for a ceasefire, negotiations go well, etc. This could easily rip right back higher, right? So be aware of that. If it starts to grind, going higher, you know what that is now. That's a short squeeze. Those are sellers getting out of positions. That's what causes the market to flutter like that. Okay, you don't need buyers to get in. Just need the bears to get out. So now what you want to do is you want to draw a trend line right off that high and then bring it right down to that big low. Now, look left, find those traps. Now, what I always try to do is I always try to get that trap and then look for that failure below the moving average into that pullback combination, right? First test is the best test, right? Makes sense? So again, trap, failure, pullback. I'm just simply illustrating right now. You'll learn all the rules. You'll see hundreds of real examples of that setup as part of that free trading course I mentioned earlier, okay? Now, where would be a really good target for that? Yeah, right back to these highs, right? That's obvious where they're trying to go. Okay, so that's one of the reversals that I would look for. I got a couple more of these reversals though. All right, and I'm gonna talk more about those in the Nasdaq and the oil. All right, got a couple more of those as we go. Now, what if we ended up all the way back at these highs? You know, sometime early tomorrow morning. How would I sell this market? Okay, how would you sell it? Well, look back here. Look what happened here. Okay, look what happened. Market runs up. Notice how the buyers try once really hard off the moving average. They try a second time off the moving average. That's what you want to look for. This is what we call a failure pattern, right? But it's a two-try failure. Why? Because it's so strong. So now let's say we get that pop up, it grinds, we find that channel, we trap them in, and we get paid, right? Up around that high. Now what do we do? Okay, there's two things you want to think about as we go higher here. One is don't be surprised if they double top it. All right? Don't be surprised if they double top it. Okay? I'm telling you right now. When a market moves this fast, this strong, there's a very good chance when you see a real strong move, it's going to at least double top. Okay? Or maybe go a little bit through it. Right? That's perfectly natural. What you want to think about, though, is whether or not they double top, or you want to think about that one, that two, and then now trade the pain, okay? Trade the pain. Buyers are now right into what really could be a lot of resistance up there, right? Remember, there's a big weekly range down here, okay? Not a breakout yet. Get the buyers trying once, buyers trying twice. Everybody's in now, right? Everybody's in now. Where are those stops? Stops are sitting right there. Where's their pain? Yep, and that's exactly where you want to look for that nice big, right? That nice big signal candle, and then grab that short. Now remember, when you do this, your job is not done yet. Okay, now you want to trade the follow-up trade. Okay, so we're going to trade short. Now, mark up that new channel. Yes, first test is the best test. Look left, and again, keep in mind, this is a 6,000 tick chart right now. We're not trading this stuff off a 6,000 tick chart, right? We'll drill down to our faster time frame. We'll go in, we'll find that trap, right? We'll find that pullback, that failure combination, all right? Where would my target be at this point, right? Again, the failure is pretty easy, but where's the follow-up target now? Back into this range. Yes, right? Back into that range. Absolutely. That's where the market wants to go. So now we got a couple options here, right? And guys, I've got a couple more variations of this reversal, okay? So make sure you keep on watching, right? We're not going to cover all the variations on each chart. I'm going to cover some more variations, right? So especially if you're new here right now, you definitely want to watch all the way through because I'll be giving you little tidbits as we go deeper into the video. All right, looking good. So now we get a pretty good idea of how to buy it as it goes higher and how to sell it as it goes higher. If we sit inside this range right now, what do? Nothing. We do nothing. We sit on hands and we stay patient. What if we go lower right now? What would the game plan be? You can buy this. Now, remind me again here, if I'm going against momentum and I want to be long, what's the best way to do it? Well, what happened here? Look back here. Look. See it? Straw move down. Bears try once. Bears try twice. And they blast, right? Draw that new channel. Grab your first test. Okay, so we're taking off that failure, right? First pullback. Going back up in. Same thing over here. Let's say we do take out that low. Again, it may double bottom before we get the 2 try. It may not. Just be aware. Takes out that low. Bears come in now, right? The bears are getting a little too aggressive. They try once. They try twice. Where are their stops? Right above that high. Okay, now, why do we let them try twice? Because we're bearish, and I'm trying to be a buyer. Okay, once they get that those stops get hit, we're buying that nice juicy signal and then running higher. Where would the target be on this one? Pendulum swing. Take the amount below the range, project above the range. Bingo. Now, obviously, I'm just estimating right now, but that's where the market wants to go. We get up. What do? Same thing. Let those buyers try and fail. Back into that range again. Why? Because ranges act like magnets. Buy low, sell high, trade the failure. Now, how would we sell a breakout going lower? Right? How would we sell a breakout going lower here? Really, well, we talked about one of them already, right? We talked about the pop and the grind. And this is definitely a market that could easily do that. Remember, the Nasdaq is not going to be like this. Okay, the Nasdaq's going to be a very big difference. So, again, you'll see this in a second. There's your pop and grind, right? Your breakdown and grind. Okay, make sure you wait for that. Get above those prior swings. Get that trap. Get that failure. And go. Now, where would our target be here now? Right? Where's our target now? This is a situation where there's way too much open space down here. Right? You'll see in a second. There's way too much open space down here. So that's not my final target down there. My final target on this one would be the size of the first leg is the size of the third leg. That's a real safe, not safe, but real reliable, real consistent way to find a target. Okay, you'll see a lot of times where markets will go 1, 2, and 3. Okay, the middle leg is kind of always an oddball. Sometimes it's bigger, sometimes it's smaller. The first leg and that third leg, that's where the market wants to go. So if we see in this illustration, move lower into that grind, right? Then definitely think about that one right there, right? As the objective. Okay? I also think too that a 1, 2, 3 breakout pattern will be very reliable here as well. So for example, strong pop lower. Now, instead of the bears trying once, twice, and going back up into that range now they hold that pullback and they jump and go lower. Okay, this is not your grind, right? It's not grinding. It moves lower, takes those lows out, holds that pullback, and bam, right? Big jump off the moving average. Now what do? You mark up that low, you mark up that high, you drill down to your faster time frame, find your traps, your failures, your pullback combos. This leg is equal to that leg. Okay, now if things really turn into a bloodbath tomorrow, this big low down here, right, 42.75, this is a major bottom, right? Major bottom. If you look at it, though, a little bigger, this was the range that we saw earlier this week. We saw a lot of these pendulum swings, right? The amount we go below the range is the amount we go above the range, right? So we came up right into that pendulum swing. So if this thing goes lower and it really starts to cook going lower here, now the next pendulum swing puts us right around 42.60, 42.61, let's say. There's also a big trend line down there. So if the you know what hits the fan and this thing starts to really drop, that's where it wants to go. Now you know how to find the entries. Okay, now what we're going to wait to do is see what we get here as far as the price action goes. All right. And again, be aware, a lot of unknowns right now between the non-farm payroll number tomorrow morning and the situation happening in Ukraine. Let's keep going. S&P looks pretty good. Let's talk about Nasdaq. Excuse me. Nasdaq is very similar, but right away here, you're going to notice one big difference. There's not nearly as much space below us on the Nasdaq, right? The Nasdaq simply doesn't have a lot of space to go lower. Okay, the S&P has plenty of space down there. Right? It's free range bears on the S&P down there. Nasdaq doesn't have that luxury. The Nasdaq has some major lows here, right? Some triangle lows, some pendulum swing lows. So, the Nasdaq is kind of pinned, it's kind of pinned into these lows here right now. So Nasdaq really doesn't have that same luxury the bears do on the S&P. There's also I think, a very, very important difference. And that is, you can see the Nasdaq has already made a lower low. The S&P hasn't made that lower low, right? The S&P came close, but you'll notice it hasn't made that lower low yet. Okay, and the reason why this is important is because you'll see that when I have a lower low like I have in the Nasdaq right now this creates an option for a channel, right? It creates an option for a pendulum swing. So there's a lot of reasons why this small difference is really, well, you'll see here. You'll see in a second. So it's not very much different than that, though, right? The bears have control. This is definitely a bear market. We saw a bear move into a trading range. It should come at no surprise that the market popped up, the buyers try, and it eventually failed and completed a pendulum swing. The amount above is the amount below. So all the fundamentals are there right now here on the Nasdaq. I've got a new pendulum swing drawn, as you can see, off of the low, and that's going to give us kind of a boundary here up here as far as where we can look for a short. What would the buyers and sellers want to do here right now? Pretty simple, right? The bears want to sell off resistance above the range. They could do it here. They could do it here. The buyers have a great opportunity right now for a retest and a buy back up. I like that trade a lot here in the Nasdaq. And I would say, too, the buyers have some great potential because this is what we call rotation. Rotation. I can't spell that. Rotation off the low. So whenever we have market rotate from below the range, what does that do? That builds up a lot of strength from the buyers. And so this pendulum swing is not a brick wall. It is a level of resistance. The buyers could easily get that reversal here, and we may quickly find ourselves right back up to those highs here. So buyers can definitely be looking for, right, some options here to be buying it as we go higher here. So there's plenty of ways to make money in this market. I think it's just very important that you see the difference here. So how do we buy it? How do we sell it? Well, first of all, this channel really opens up a lot of, well, not a lot of options, but I think it opens up a good option right now. One of the things I'm gonna kind of teach you as a student of mine in our video classes and in our trade room is whenever I'm trying to sell a retracement or sell a pullback like this, you want to think about how strong that most recent leg was. That most recent leg was pretty strong, right? That was a pretty strong move down. And so we know that the odds are pretty good that we're going to get a retest of that area here. So here are a couple ways that I would look to sell short without having to wait for all the way back up. Okay, here's one way to do it. Again, very strong move down. What if there was a tighter channel here? What if there was a steeper channel? Something like that. That definitely could work. Now, it's a little bit tough right now. It's middle of the night. Technically, we're not really in a very liquid time of the day right now. So one way to sell a shallow pullback would be what we call a two-try trap. Okay, so in the overnight here, that would be the most reliable way for us. Okay, and basically what you're doing is you're trying to find a trap entry. It's not a great location for a short. It really isn't. You get the underbelly of the range, that looks great, but it's just not a great location for it. I'd much rather sell above that high. So to kind of compensate for the lack of location, but to give myself an option because it was a strong move down, I'll try once, I'll try twice for these buyers, and then look for that nice juicy signal, look for that retest of that low. That's one way to sell it. Another way to sell it would be not to look for the trap, but to wait for that pop-up, run into that channel now, get those buyers to try to buy the pullback, which may or may not hold, and then look for that failure into that pullback combination. Okay? So failure, right? Selling into pain, selling into stops. And then I say pullback. That could be a trap setup. That could be a failure setup into a pullback combination. Again, this is a 4,000 tick chart. We're not going to trade off a 4,000 tick chart. We'll trade off a faster time frame. And again, those are the same entry setups, right? Those failures, traps, pullbacks, all the rules are covered in that quick start, that free trading course. So make sure you grab that. Okay, where would the target be on this? Yeah, back to retest that low. Definitely back to retest that low. All right, if you want to leave a runner, other side of that channel. Okay, this channel can be used as rotation. All right, now, as we go higher, okay, as we go higher, how do I sell off this high? Great spot to sell short, but what's the problem going to be? The problem is going to be momentum. When it picks up like this, that momentum is going to be tough. Okay. Now, there's a very big difference between being inside a range and then pulling back and going lower, and being below the range and then pulling back, right? So I can use a regular failure pattern to sell above the high of the previous example, but when I'm rotating off that low like this, now we have to, well, there are usually two types of entries we look for on these full pendulum swing rotations. One of them will be a two-legged pullback. So imagine now the bears try, but they keep going anyways. Okay, now what we'll do is we'll draw a trend line, and then we'll try to get underneath that trend line and use it. Okay, we call these two-legged pullbacks. Okay, just because the nature of two legs, right? One leg, two leg. Okay, so watch that trend line. Anytime we're expecting a deep pullback like that, you want to watch that trend line pretty well. Okay, or as we go higher here, as you can imagine, we're gonna look for a failure, but now we look for that two try failure, right? That one, that two. Now I promised you guys some variations of this. One of my favorite variations of this is to use a trap off of that high. Right? A trap entry off of that high. And again, you'll learn all about traps inside the video course. Then as we go lower, right? There's your two try failure. As we go lower now, what you want to remember is the amount we go above, is the amount we go below. Find that new channel, drill down, find that prior swing, get that trap, get that failure, and get that money, right? Going down to that low. Make sense? Okay? So two try failure, again, it's different this time because the momentum is different. And then into that rolling over. And then remember, right? First test is the best test. You want that first test off that channel low. All right? And again, you'll learn more of the smaller techniques, the actual techniques of finding those channels, the time frames we use inside that trading course I mentioned earlier. Okay? Now, this is also another example of where if the market was to, let's say, for example, let's say we pop up, the buyers now hold the pullback, and they really jump, right? They really jump. If this thing launches, right? If it launches off of that moving average. Now, remember, it doesn't matter how strong the first leg is. We see a lot of times where the first leg up will be very strong, but they can't keep it going. But if they can get that 1, 2, 3 reversal now, okay, that pendulum swing's probably not going to hold. And so what you'll do is you'll mark up that high, mark up that low, and then again, you want that first test. Now, what may happen in this situation is we may end up getting our entry, getting that retest of the high, and then 1, 2, back down in. You got, right? Makes sense. So we may end up getting that. Don't be surprised if that happens. I still want to buy that first test. If you have enough momentum, if there's enough momentum going higher, you can pretty much bank on that first pullback. It may not make you rich, okay? It may not go forever up here, but it will usually almost always retest that high, right? And in my video courses, I talk about how to use volatility to find a quick first target, get rid of the risk, and then leave the runner. So you'll learn more about that in the video classes, okay? So that's something I'm watching as we go. Or maybe the market, right? Maybe it pulls back, jumps, and begins to grind, right? That could easily happen. Ignore the bigger channel and draw it off the grind, right? Draw it off the grind. Whenever you see it pop and grind like that, draw that channel right off those highs like this, and then find those, right? Rinse and repeat. Traps, failures, pullback combos. Where's the target on that? Well, we got these highs up here. That's an obvious target. First leg, third leg, okay? The middle leg is oftentimes the oddball, so keep it in mind, okay, as we go. And then same thing as we get up here, right? If we get all the way up, we may see it pull back, double top, and then 1, 2, back down in, find that new channel, and be ready for that first test, right? It's that 2-try failure into that first test pullback, and then potentially all the way back down into that trading range again. Okay? And obviously we'll know more once we get up here. There's also a chance, and this would also apply to oil too, which we'll show in a second here. There's also a chance too this market gets that reversal, and this would also work for the S&P. We pop up, we get the pullback, we retest, and now we go into a range up here, right? What if the market starts to go sideways at this point? We use the new range as a new magnet. Okay, it'll be a bull bias now. So what do? You find levels of support below the range and you trap in those breakout bears with a failure. Okay, these are really, really easy setups when you know what you're looking for, right? So bull market into a trading range, just like a bear market into a range, would find levels of resistance and sell into buyer failures. If this thing goes higher, we simply wait. Again, if it goes up in a range, we find levels of support below it, and we mark up those failures and trade into pain, right? Trade into those stops. The easiest money you're ever going to make is when you're getting long and the sellers are caught in a short position in a bullish environment, right? We've all made that mistake before. And once those inexperienced traders realize they're on the wrong side, they're not gonna wait. They're gonna get out of those short positions, and it will squeeze that trade ripping higher. Okay, as we go lower here, this is one of the big differences between the S&P and the Nasdaq. If we go lower, can I buy off the low? Absolutely. What do I need? 2-try failure. 1, 2, back up again. We've talked about a couple variations of this. Okay, be careful on this one with that first test. Okay, be careful with that first test in this one. These are ones you're going to be careful with because there'll be trend lines coming down. Okay, so be careful on that first test, right? I like the first test a lot better when you're coming off the high and you got all that wide open space. There's no trend lines in your way here. You know what I mean? So just keep in mind on that. What if we go lower? If the market goes lower, what I'll be looking for tomorrow is how strong the move is. What is very likely, I would imagine here on the Nasdaq as we go lower, is if we get down around this area here, we're going to probably see something, right, bounce hard, right, and want to sell into that bounce. So let's say, for example, and this again is one of the big differences between the S&P and the Nasdaq. If we end up getting that, let's say the market kind of rolls over here, right? Rolls over. We're definitely bearish, and we're expecting a retest of that low, but you're going to want to look for those bigger channels, right? Wait for those deeper pullbacks and try to get those buyers roped in, possibly, depending on how strong that pullback is, with a 2-try failure before we get that roll back down to retest that low. Okay, I can be pretty aggressive on the S&P because the S&P has quite a bit of open space down there. On the Nasdaq, you got to be thinking as we go lower, a lot of sellers are not going to be too keen. A lot of professional sellers are not going to be too happy with selling very low, right? It's still a very bear market, and because of that, we do expect a retest at some point, but we want to make sure we think a little bit bigger here now and try to get that deeper pullback, trade the pain, and then back down to retest that low. Now, if something really dramatic happens, you know what I mean? Let's say, for example, something comes out, the market just shoots lower. Okay, this is definitely where a 1, 2, 3 breakdown can help, right? 1, 2, 3 breakout, we break lower. There's new headlines coming out, right? Headlines are, bloodshed everywhere, new developments, peace talks fall apart. Everybody's panicked. You know what I mean? That's the environment you're in at this point, right? So market tanks. Market breaks out and runs lower. Again, this is an example of where if it's strong enough, you'll probably get that profit off of that high, right? It may not go forever. Okay, then we get the 1, the 2, and then back up again, right? But you can probably get that little short, right? And again, I say short. It'll be a trap. It'll be a failure. It'll be a pullback combination. So this is definitely one thing we'll have to wait and see more tomorrow. If it lazily goes lower here, waiting for that pop, trapping in those bears, and then back down will be the most reliable way to do it, all right? And do not be afraid if this market takes off the downside, right? Retests 1, 2, get that failure. Don't be afraid to grab that first test off of that low. That'll be a great trade, right? So strong move down. We find our channel. We hit the top of that channel, right? Make that retest. Quick scalp for the bears. Then the bears try a couple times. They're not getting anywhere through this major support level now. We buy right into those stops. And then we drill down to our faster time frame, and we find the entries off the high, off the low of that channel. Okay, where's the objective? Right back into this area. Ranges act like magnets. All right, I love that long trade. That's one of the most exciting trades for tomorrow. So to wait and see if we can get down there. All right, guys. So I got a lot of great ideas in the Nasdaq. How about the oil? So oil is definitely the most, pardon the bad kind of pun, right? Explosive of all of these markets right now. Volatility is incredible right now. Oil usually makes a $2, maybe $3 move. The last few days, we've seen $10 moves here, right? Plus some on oil. So most important thing right now is there's this big cloud hanging over oil right now because of the situation in Ukraine. A little bit, obviously, of the overall inflation mess that the Fed has created. But for the most part, right, every headline right now is being hit by algos. So we got to be a little bit sensitive to that here for tomorrow. A lot of this is very, very similar, right, here on oil. Bear market into a trading range. Range acts like a magnet. Not a lot different than everything else. One very obvious part about this is the sheer strength of that move going lower. All right, it's a very, very strong move down. Anytime we see that much strength, we know there's a big bullseye right on that low. And then from there, do they go higher or do we keep going? Okay, so where do they want to get short? The bears want to get short. They want to short off resistance levels above that range. Okay, which I think is a very, very important difference here because that will give us some rising support. Okay, we'll talk about that in a second. That's a little bit different than we saw on the other markets, like the Nasdaq, for example. Okay, so bears want to sell off the high of that range. Bears obviously can sell off of that high, and they can sell on a breakout. Okay, now the breakout going lower, there's a lot of different ways you could look at this right now. I think that 100. If this is a normal situation right now, I would say, 108. We could make it down to 105, 104. Again, most oil days aren't going to go more than $4 or $5, right? But again, because of the situation we're seeing right now, I wouldn't be totally shocked if we touched 100 tomorrow. Wouldn't be totally. Again, a lot of this is dependent on what we get here out of Ukraine. The pendulum swing from yesterday's trading range, as you'll quickly see, right, puts us down around that 102. So this area right down here seems to be very, very easy to understand. The bears were trying for it. Okay, so bears would love to get, I would say, at the very most at 100. Well, definitely very most. We'll see what happens here. But 102 would be a very reasonable objective here. The buyers, if you've been paying attention here so far, right, the buyers can buy off of that low, right, to try failure. The buyers could also easily buy this breakout going higher, and dare I say, a breakout through it go into that 120, right? You would think that 120 would be the next big round number. There's not a lot of technical, stuff up here. It's not all-time highs, but it's pretty darn close. So 120, they've pretty much been bouncing around 105, 110, 115. Think of those round numbers. So buyers would love to get back to retest this big high or all the way up to that, right, that big 120 area if they can get their hands on it. That'd be a pretty big move. That'd be a $12 move tomorrow, which, if things keep the way, if things keep escalating, that could easily be part of it tomorrow. Okay, going higher here. I think one of the biggest differences on this one is if we simply go higher here right now, this is going to be a trend line. It's going to be a pain in the butt. Okay, this trend line will be a pain in the butt. So what you want to do is, if you're worried about a trend line here, what I want to do is I want to use a trap entry. Okay, and we see a great one right here. We pull back. See how the buyers try once, buyers try twice, and that little trap right there? This is the type of setup that you're going to want to look for over here. Okay, so as we go higher here right now, again, trend line coming in, that's the big concern. And I would also say, too, if it rips higher here, I would be suspicious of the sell side right away, just because of everything going on right now. Okay, but, technically speaking, though, at that point now, let those buyers try once, let them try twice, get that little trap on there, right? And that will help us to avoid that trend line, right? Take some profit off at the trend line. Definitely leave a portion for that runner, though, at that low. So that's kind of a variation of that setup that I think will be best fitted for this situation because of that rising support trend line. Now, that rising support trend line absolutely gives the buyers a huge advantage because now, with that trend line here, it's not difficult to think now. We might get a pop-up. The bears come in and say, no, I'm not going to sell into that trend line right now, right? Not what's going on right now in the world. I'm going to buy off that pullback, and we jump. Now, this again, because we're kind of threading the needle here, there's your 1, 2, 3 reversal. Mark up that high. Mark up that low, grab that trap, that failure, that pullback. We know where the market wants to go, but again, you can fine-tune that exit by using that first leg, third leg trick, okay? Or, easy one here, pop and grind. Pop and grind. You guys know what I'm talking about now, all right? I won't bore you guys with more repeating it, right? Pop and grind, get in off of that low. And then do you think it's possible we might go up? 1, 2, absolutely. Failure, back down again, new channel, first test is the money test, right? So we're grabbing that first test, we take out those highs, the buyers go, okay, boys, we're done, let's go. And they go, right, 1 try, 2 try, sell off the high, right, sell off the high, and then back into that range as we go. We'll see how they do as far as a breakout out here. Also, too, remember it's 115, right? Big round number. We run up, we retest the high, and now we go sideways. Range. What do you do in a range? You find levels of support below the range. You wait for the pullback. You trap in those bears. Remember, if there's a range, the range becomes everything. Well, not everything. Momentum is also important, too. Okay? So the minute you see that range up there, everything pauses. Work the range now, right? Work that trading range now. And you're going to learn a lot more about ranges inside that free course. As we go lower, 1, 2, back up, right? Typical stuff. As we go lower, 1, 2, 3, strong breakdown. Mark that low, mark that high, drill down, find that entry, right? Another variation as we go lower. Haven't talked about this one yet, right? The market pummels going lower, right? There's a ceasefire. It's over. The war is over, right? Something great has happened. Big discovery, right? Now, the market tanks. It goes back to really where it should have been the whole time, right? Market tanks now. Strong move down. Shallow pullback. Lower low in price. Traps. Okay? If the market goes in free fall. Again, I get a lot more where this came from. I'm just simply going to the basic stuff with you guys right now, right? So market goes into free fall here. Big move down. Shallow pullback. Nobody can get in short, right? Nobody can get in short. That lower low sets the tone, and now, bam, right? That short is where you want it. And again, I would imagine at that point now, that big round number at 100, pendulum swing down here, that's your objective. All right, guys? And this video is getting a little bit long here right now, so I really appreciate you staying tuned on this. I think we've covered a lot of the bases right now. So now you get a pretty good plan of attack if you're trading on your own tomorrow. Don't forget, every morning in the trade room, 8 o'clock Eastern time, if you're sick and tired of missing the best trades each day, or maybe you're making too many mental mistakes, or the losses are simply killing your account right now, that's exactly why our trade room is there, right? You'll learn the strategy in our video classes, and we'll come out and we'll trade, we'll execute the stuff together. It's a great place to learn and earn. It's a great place to be part of the community there, right? So you're not trading on your own each day. I'll put all the membership links, all that stuff will be right in the description of the video. Don't be afraid to call the office. I'm always here to help out with charts or data or broker questions or anything we talk about tonight. Don't be afraid to use live chat, right, on our website as well. We're always here to help out. All right, guys, now get out of here. Rest up here tonight. Get a good night's sleep because tomorrow has potential to be another very busy day. Be aware of that news tomorrow bright and early. Remember, don't trade the news. Trade the reaction to the news. And think about that bicycle metaphor. Don't force bad trades tomorrow. Save some bullets for Reaction Monday. All right, guys? If I don't see you tomorrow, I will see you guys back here next week, and we'll keep this newsletter going. As always, my name is Joseph. Thanks for tuning in here tonight. Be well. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.